Whenever Amazon drops its latest numbers, the whole world kind of stops to listen. But to really get what's happening inside this absolute behemoth, you've got to dig way deeper than just the headlines. So that's what we're going to do. We're going to crack open the latest analyst report from Morningstar and figure out what's really fueling the Amazon empire.
And yeah, that fresh data just landed. The company's third quarter results give us a brand new, detailed look under the hood. And let me tell you, they reveal a pretty surprising story about where Amazon's true power really lies.
Because if you look closely, buried in all those numbers, there's one single division that's accelerating so fast, it's not just driving profits, it's literally rewriting the entire company's future.
So let's start right there, with the headline story from these latest results. What exactly made this quarter so incredibly strong?
Well, the big story, it really just boils down to this one number, 20%. Just let that sink in. That's the stunning year-over-year growth rate for Amazon Web Services, or AWS. And that kind of acceleration, it made everyone sit up and take notice.
In fact, the analysts at Morningstar put it right there in their headline. This wasn't just a part of the good news. AWS was the absolute star of the show. It was leading the charge and lifting the entire company's performance.
Now, don't get me wrong, the rest of the business did great too. Overall sales jumped a solid 12%, which smashed their own guidance. Third-party sellers, the classic online stores, they both showed a ton of strength. But the really interesting part? CEO Andy Jassy thinks this blistering pace for AWS can keep going for, and I'm quoting him here, a while.
Okay, this brings us to a super important point about how you have to think about Amazon today. If you want to understand its real power, you have to look past those brown boxes that show up on your doorstep. For most of us, Amazon is just that website we go to for, well, pretty much everything. But that massive retail operation, it's just one piece of a much larger, way more complex puzzle. The real empire is actually built on three totally distinct pillars. Let's just look at the breakdown here. So, retail-related sales, that makes up about 3/4 of the revenue. I mean, that's huge. But look at those other two slices. You've got AWS, the cloud computing giant, bringing in 17%. And then there's the super fast-growing advertising business, which is now at 9%. These are not side hustles, folks. These are massive, high-margin businesses all on their own. So the big question is, how does Amazon protect all this? How does it defend its dominance? Well, that brings us to one of the most important ideas in business strategy, the economic moat.
Yeah, just think of it like an old-school medieval castle, right? In a super competitive market, you need defenses to keep all your rivals out. So what are the walls and waterways protecting Amazon's kingdom?
An economic moat, to put it simply, is a competitive advantage that can last. It's that secret sauce that lets a company fight off competitors and keep earning high profits for a long, long time. And according to Morningstar, Amazon's moat isn't just strong, they rate it as wide, and that is the highest possible rating they give out. What that means is they believe Amazon's competitive advantages are just incredibly durable and powerful. So what fills up that moat? Well, the report points to 4 main sources. First up, you've got network effects. Just think about it. If you're a small business, you go to Amazon because that's where all the buyers are. And if you're a buyer, you go there because you know every seller's going to be there. Second, huge cost advantages. With its insane global fulfillment network, Amazon can deliver stuff cheaper and faster than almost anyone. Third, intangible assets. This is the sheer power of the Amazon brand, plus the mountain of data and tech it uses to know what you want before you do. And finally, switching costs. This is huge for AWS. Once a company like, say, Netflix builds its entire system on AWS, the cost and pain of moving to a competitor is just enormous.
Now here's the really brilliant part. These 4 advantages, they don't just exist next to each other. Oh no, they actually feed into each other, creating this powerful, self-reinforcing engine for growth.
And this just shows you exactly how it works. It all starts with low prices and that massive selection, which pulls in tons of customers. Of course, all those customers make Amazon the #1 place for third-party sellers to be. Then, those sellers add even more selection, which creates competition and pushes prices down even further. And the masterstroke? Amazon Prime wraps the whole thing in a bow with fast shipping and extra perks, which locks in customer loyalty. You see? The circle just keeps on spinning, getting stronger with every single rotation.
So, with a model this powerful, is Amazon basically unstoppable? Well, hold on a second. Every investment has its risks. So let's take a look at the road ahead and break down both the good and the bad, the bull and the bear case for the company's future.
All right, on one side you have the bulls. They'll tell you Amazon is the undisputed king of e-commerce, and that its two big profit engines, AWS and advertising, are growing way faster than retail, which is going to make the whole company even more profitable. But on the other side, the bears. Well, they point to some very real risks. You've got growing regulatory threats against big tech, the huge investments they have to keep making could hurt their cash flow, and look, there's no guarantee Amazon can conquer every single new market it tries to enter, like luxury goods, for example.
So after weighing all of that, what's the bottom line? Where do the analysts see the real growth coming from, and what does it all mean for the company's actual value? And here it is, the critical takeaway. The report is crystal clear that over the next few years, the future isn't just about selling more stuff. It's all about AWS and advertising. Analysts are projecting both of these high-margin businesses to grow at a blistering 18% compound annual rate. That is going to be the main force pushing Amazon's overall profitability way up.
This all leads us to one final number. Based on this whole analysis, this widening moat, and these accelerating profit engines, Morningstar puts its fair value estimate for Amazon stock right at $260 per share.
And that really just leaves us with the one big lingering question. We've seen the power of its virtuous circle, we've seen the depth of its economic moat, and we've seen the incredible acceleration of its new profit centers. So as this titan of tech and retail just keeps expanding, you really have to wonder, is there anything out there on the horizon that can truly slow it down?